This conference will now be recorded.
Okay, so in Blackboard is a template similar to this, which you'll be utilizing for step 2 of the project, and we'll get a little bit into step 3. But on step 2 of the project, you'll be determining a selling price. And that selling price is going to be a multiple of only raw materials and labor. Now, here to date, I've always given you the quantities, but because I'm no longer giving you the quantities and fixed costs take on a different role, the selling price multiple is going to be a percentage of raw materials and labor. And what we're doing now, and as well as in the course working on projects. Now, when you do step 2, there are several things you have to do. First of all, you got to create an ad that you would utilize in Blackboard. So you in Blackboard at Amazon. So you go through and create this ad about your product. Nice picture, reviews, and all of that. For your logo and everything. Then you look at your Amazon selling expenses. So you go through that. And then you tell me in the business success formula part, 10 reasons why companies fail and 10 reasons why your company is not going to fail. So you go through the reason that companies fail in general, then you tell me the reason that your company is not going to fail. Okay, so let's go back to the first sheet, which lays out what you're expected to do. You got to get a selling price as a multiple of raw materials. So if you have more than one raw material, then you have to list all of those raw materials and add them together. That's why you had some of that practice. Now, when you have we're on a unit cost, okay, and so this team is, when they were making this, sometimes they needed more than one item. But you got to make sure you're doing the unit cost. So their unit cost is 3 times 1 times 1 times 1 time. You're calculating the cost of one item. So this was the cost of one wig, $230, with 3 bundles required. Use whole numbers, don't use decimals. So round to the nearest dollar as you get your unit cost. So when you're over here, make sure you're using whole numbers. Then they did their direct labor. They said it took 2 hours to make it, cost per hour 10, so the total cost is 20. So the total product variable cost is $250. And so when they multiply that by their multiple 2, they got a selling price of $500. This is your product, and so you're going to have to come up with these costs as well as your selling price multiple. That's your responsibility. Bad debts expense, you can use, unless you want to use something different, 10% of the selling price for the bad debt and 20% of the selling price for selling expenses. So if we had a $500 selling price, then bad debts would be 50, selling expenses would be 20. And so the total variable cost, the product cost, materials, and labor, the bad debt and the selling expense comes out to 400, with the selling price being 5. You get a unit contribution of 100. So this is how your project in part 2 should be looking. Next, we come to fixed expenses. Your fixed expenses must exceed $100,000 in year one, $200,000 in year two, $300,000 in year three, and $400,000 in year four. So your fixed expenses must exceed these amounts. In the course, your raw materials and labor, bad debts, and selling expenses on your project in the course from now on, those will always be variable costs. Your fixed expenses are going to be three things: manufacturing overhead, administrative expenses, and interest. So those three items will always be fixed expenses. Now, to get your manufacturing overhead, remembering you moving to make $1 million and $2 million, you got to look at financial statements for the industry that you're in and come up with production manager, supplies, insurance, rent, utilities. Since you're renting, you rent the building, you would not have depreciation on the building. But if you want to buy a building, you can have depreciation, but you got to buy the building. So that takes additional things you would do. Your depreciation on the equipment, we'll talk about that. That's calculated below. If you got salaries, you got 25% fringes on them. So this is the total manufacturing overhead cost. You create this. Administrative things, the same thing. Salary of the president, CFO, the fringes on that. Depreciation on administrative equipment, then your total administrative expense. Next comes your capital expenditure budget. You have to determine how much equipment you're going to buy to make the item, and then your administrative expenses, equipment purchase, desks, chairs, computers, etc. So they came up with 171.6 for manufacturing, 157.5 for administrative expenses.
So where we pull these numbers from? Like the sky? We making it up as we go, or?
Yeah, you would go through and look at what you want. I mean, what type of equipment that you want in your office, your desk, your chairs, your computers, you would be laying that out. And that's, so you, okay, if I want 5 desks, okay, boom. You cost those desks out. So you create these expenses. After they're created, you to use straight line depreciation 5-year. So notice that we use straight line depreciation 5-year. We got $34,250 for the manufacturing overhead and $31,500 for the administrative depreciation. Those numbers then come back up here. So here's your administrative expense for depreciation, $31,500. That number comes in here. Then the $34,320 on the manufacturing equipment, that number comes in here. In general, it's best to buy your equipment once. So if you buy it once, you're only buying it the first year. Like you buy a car, you don't buy a car every year. So that doesn't, the purchase in this administrative and this capital expenditure budget doesn't have to change every year unless you want it to. We're assuming that you borrow the money to buy this equipment and your interest rate is 10%. So once you add up everything that you borrow, you pay 10% interest. Then you come and you do your fixed cost schedule. Manufacturing overhead, administrative expense, interest expense, and you add all of these up. So to get your total fixed cost. So on your project, in the course from now on, manufacturing overhead is fixed, administrative expense is fixed, interest expense. So you total those out. Then you come to the key part of part 1, quantity to be produced. So that's why you're learning it. So now you will be telling me on your project what quantity will be produced to lose 100,000, to break even, to earn $1 million, and to earn $2 million. These numbers kind of need to be right, because there are a lot of things we're going to do based on those numbers. Selling price on. So the numbers need to be correct. Then there's some assumptions other assumptions that you need to get in there for step 3, quarterly sales. We'll be working on a quarter basis. In actual practice, you do it monthly, but we're going to be working quarterly in terms of, so the assumptions here, and you can change these, but most sales occur at the end of the year. So we said in the first quarter, 10%, 20%, 30%, 40%, 100%. Okay, so sales, to make it easy, make all your sales credit sales. Make all your sales credit sales. Then you have to come up with collections in the month of sale, collections the first month after sale, collections the third month after sale. So you have to come up with that. Your desired ending inventory. When you run a business, you don't come into the next period with no inventory. So 50% is a good amount that you're going to produce in the quarter prior to it occurring. So in quarter 1, you got to produce what you're going to sell in quarter 1, plus half of what you're going to sell in quarter 2. Payment for your raw materials, you use these numbers, 75% the month of sale, 25% the month of sale. Manufacturing overhead, you're just going to get that total number and divide by 4. You're going to do the same thing with depreciation. And you're going to do that for all your fixed expenses. Administrative expenses, you're going to divide by 4, and the depreciation. You will make an initial investment of $200,000 in your company, and your minimum cash balance is $1,000. So when you're operating, when you get to $100,000, then you got to go borrow some money if you don't have enough sales. But your minimum cash balance is $100,000. You're purchasing the equipment with the note, so you're going to have down here also the monthly payments for interest and principal, and those will be equal amounts. And you'll be paying that note off over 5 years. So these are all the assumptions that you have. So this is part 2 of the project in Excel. Did I answer all the questions, Tyler?
Yeah. Is this like is it a template for this, or we make our own?
This template is in Blackboard, but you can look at it and adjust it and work with it. So I got a little lazy with my numbering. So let's see, 1, 2, 3, 4. Then my number starts. So you all got to get these numbers straight. So so that'll be you all's contribution to the formula in terms of getting the numbers straight and seeing if this order makes sense. So once you do that, have the numbers numerical for the next class. Capital expenditure doesn't have a number on it. then this got back to 2 and everything. So other than that, but whatever you want to, whatever you want to do so that this works well for you. But the base template is in there. Any other questions?
Yeah, when is this due?
Tuesday? Think you can have it by Tuesday? At the latest Thursday.
So step 1 was just showing you what we were doing, and step 2 come with all the numbers and charts and stuff.
Mm-hmm.
Is there a step 3 or 4? Or is this it? What you laughing for? You asked about questions. I'm being serious now.
All right, so all right, let's see if we can go to.
Lord, you're not gonna answer it. All right.
Hey, where are we sending our product to?
Doctors have to see stuff, so I'm gonna show it to you all. What now?
So when is project part 2 done? Due?
At least by next Thursday, because I need to check it. That'd be a good thing, because you do parts 3 and 4. If any of those numbers are wrong, you blow up parts 3 and 4. So let's just see if we can find something here for Dawkins. She has to.
Where are we sending our finished product to? I know we're supposed to mail it to you, but when are we gonna get?
I'll get that to you all. I'll put it in Blackboard.
Okay.
Let's see if I can see one. Oh, let me just go here somewhere. So here we go. So here is a. Let's see. This is Master Budget in-class problem 2. There's an in-class 1 that every team will have a part of. Okay, so here you see these assumptions, okay, which will be done. Everything that we just looked at. Then you got to do a sales receipts journal, a schedule to show the sales each quarter and your collections and all of that. So you got that scheduled to do. It's just year 1. You got a production budget to do. How many are you producing? Then you got to purchase the raw materials. So you got a schedule for that quarterly. Direct labor budget, manufacturing overhead budget, selling expense budget, administrative expense budget, capital expenditure budget. So you got to do all of those budgets. And then the purpose of it is to get to a cash budget so that we know whether you got enough money, because if you don't have enough money to pay all these expenses, then you have to borrow money. You have to get a short-term loan, but you must do this ahead of time. So if you're running a company and you're gonna have lean quarters, you go to the bank at the beginning of the year, you lay out what things are gonna look like, and then you get your short-term loan set up ahead of time. If you wait, then they're not gonna loan the money to you. So that's part of what we're doing. Then you got your direct cost of income statement.
You know, Professor Boyd, I'm not one to complain, and I don't want this to sound like a complaint, because it's not.
Good.
But it seemed like a whole lot to go from learning about variable costs and all this, and now I got to make budgets. Listen.
Yeah. If you're gonna run a business,
I mean, it's not like we even really went
I have
over
no
the
aspirations to
cost
be a
that much.
business owner ever in life. Like, for real, it seemed like a whole lot going on here. We went from just telling you about a product to making up numbers that's coming from somewhere.
you asked, then I showed it to you. But we aren't there yet. You asked. See, you have to be careful what you ask for.
I'm just saying, how are you grading this, by the way? And how much is this project worth?
100 points. project is worth 100 points.
I'm just learning shit in this class.
Biggest one yet now.
You know, it might be good to have me in a good mood. So if you can't operate properly and talk right, I'll just put you out the class. Lock the door and you can stay on out. Got it? So if you don't like what's happening, then you drop the class and you take it this summer from somebody else. But this is how I taught the class. This is where I taught it last semester. This is how I'm teaching it this semester. All right. See, got me all the way up here at the beginning again. Like I say, every year the students do it. So not like people hadn't done this before. You have to look at your education from the standpoint of, what you're trying to do. You want to know the same thing you knew when you got here, or are you trying to learn something different? So and to say, well, I'm not going to do a business plan. You never know what's going to happen or what opportunities come up in the future where you might need to use something like this. But if you're graduating from a business school, you should know how to start a business and run a budget for it. Even if you're working for a company, as you move up, they work on budgets. They don't just sit around and run the company and not look at numbers and figures and budgets. So that's what happens. I'm not sure. So you have to make sure what you tried to do. But anyway.
I guess what's confusing is how it pertains to accounting and managerial accounting.
Say that again.
What's kind of confusing is how it pertains to like accounting. Like that seems more than just accounting.
Well, in managerial accounting, you make a product. Okay, you make a product. You still got to do everything else, as we said before, but there are aspects of making a product. And when you make that product, and you get to the end, now this is a major part. This is the major part of the course. Cost, volume, profit analysis. Like Emma indicated, they utilize that all the time. And all companies have budgets. I don't know how you think a company operates. All companies prepare a budget.
Right, but I guess you're looking at it from an entrepreneurship type of standpoint, whereas an accountant works with a company that already has a product, already has set goals and stuff, and the accountant is given the numbers and goes from there.
Those companies prepare budgets. They look at other options. They look at new products. And when they look at a new product, they go through this process. That is, they don't just say, I'm making one product and that's it. They're always looking at other options. And when they look at other options, they go through this process. How much does it cost to make it? How many are we going to sell? Okay. Look at Apple when they make a telephone. They look at how much it costs to make it, what they need to sell it for to make a price. Computer companies, as they make new computers. So you all are assuming something is not happening. But a company that's growing moves from current products to new products. It looks at new division. It looks at new, other companies that acquire. It doesn't just sit there, I'm making a product, this is what I'm doing. So just kind of take my word for it. So last time we looked at cost, volume, profit analysis, and we looked at break even. And we said that all companies are doing this. they always, as they're working with items, they look at the break even, and then they look at, if I change the price, can I increase the profit? And we looked at the situation where if we hired an accountant, what is the change in the break even? So we look at things like that to see what adjustments we make. And so if you're not changing and what you're doing, then you move out of business. If you look at the Dow Jones, you'll find that the companies don't stay. That is, most companies that were in business 50 years ago are gone. So change and being able to adapt to change is what you got to be able to do. Just take my word for it that these, budgeting is something that you do. Are there any questions about why are we looking at break even? Let me ask that. So that's where we are now. Is that beneficial? Is break even analysis beneficial? Okay, and so we looked at a problem, and what I told you to do, there were 3 formulas. And if you work with these formulas, break even, target profit, and target loss, you could determine where we are with regard to how much does it cost to break even, target loss, and of course, target profit. And so when you're running a company, initially, companies lose money. You still got to operate that company and have the cash to run it. And so the purpose of this target loss formula is to say, okay, this is where we're going to be, and this is the loss. I got to make plans to operate with a budget and with a loan from a bank if necessary in my lost year. Then this is my break even year. I'm telling the bank when I'm going to break even. And then this is my target profit when I get into, okay, if I'm going to have a certain profit, this is how many I need to make. Well, the quantity we need to make impacts how much raw materials we need to make, what size facility we need. And so all of those things are, tie into that. So this is how businesses operate. Are there any questions on the formulas or anything we did last time before we look at the homework? Any questions on the homework?
Yeah, can you look over 14.1 or 14-1?
Well, we'll do that. What about the other ones first? Like
Oh, no.
3 and 4. Are there any questions on 2?
Yeah. You had a column in there that said something after hiring or something like that after hiring. You see right here? Yeah, break even after hiring an accountant, and I ain't see no numbers that kind of went.
We said it was 50,000.
What?
But if you didn't have it, that's fine. But you would need a number. And I said last time that if that number wasn't there, that it was 50,000.
Okay. But if that column didn't get done, it's not gonna count against, right? Because it wasn't included in the study problem.
Correct.
Okay.
Okay, so.
But yes, we should go over 14-3 very, very quickly because there's some questions that need to be answered.
Right, yeah. Yeah, I actually we need to clarify that really quick because it was like just a few little
just a couple of hiccups. That's it.
Okay, so Macon, which one that you have?
(14-3).
Okay, so you have 14-3?
Yeah.
Okay. So this is 14-3. Let me see if I can find. Okay, here's 14-3. The raw materials paper was 1 ream at 10. The raw materials ink, 2 cartridges at 20. Direct labor, 1/2 hour. And so, and you were paying them $10 an hour. So that may not have been overly clear, but it took you half an hour to make it, and you were paying them $10 an hour. Your
So that's
manufacturing,
5, right?
yeah, your manufacturing overhead was 100, and your administrative expense was 40, and your
You
units.
got. I need explanation on that.
Where's Walls?
Okay,
Okay.
because
Walls, where's the camera?
You need an explanation of what?
Why?
dead.
Okay. So
One person talking to time.
for the variable of costs, you said half an hour is $10.
Well, it was a half an hour at $10. So you may have looked at that different, but this is supposed to be you're paying them $10. So it wasn't worded well. It took you half an hour to do it. So if you had a different assumption that it was 10, that's fine.
Okay. And with the ink as well, you need 2 cartridges to make one product.
That's what it
One
said. Yeah.
And it's $20 for 2 or $20 for
Each.
1.
2 cartridges, 20 each.
So for 1.
So 1 would be 20. It says 2
Okay.
cartridges, $20 each. You bought 2 things, they were $20 each.
All right.
So I'm,
So you add all of them together, that'd be 55, right?
well, let's finish looking at it. 2 times the selling price, 2 times the variable cost. So let's look at what we have here. So if you had a different assumption. So she said 1 ream at $10, 10, 2 cartridges, 20, 40. So she had 50. Her direct labor at 5, so she had $55. So her costs were $55. So if her costs were $55, then the selling price would be twice that of 110. She added the fixed costs together and got 145. So we go over here for the column for 1 book. We sell it at 110. The variable cost is 55. So the total variable, so she just added them all up. So the contribution margin was 55 also. Fixed costs were 140. So on 1, if she sold just 1, she'd have 139, 945. Any questions? So the wording may have been off, and if you made a different assumption, you know that's not going to impact your grade. Okay. Then we go to the break even, 25.45. So based on her analysis, you come exactly even. Then on the target loss, she put in 727. She lost 100,000. So these numbers come out exactly even, Tyler?
Like after rounding it and everything, yeah. After
Okay.
rounding the other numbers.
Then with the target income of 20,000, of $1 million, she had to make 20,000. And so it came to $1 million. So you just want to be close with those. And so what do you see when they hired the accountant? So when they hired the accountant for 50,000, you see that what happened? The fixed cost went up to 190. So the break even shifts to 34.55. So this was to show you what would happen when you're running a company and you hire somebody for $50,000. Look at how much more the sales have to be. Or if you had an ad campaign for 50,000, look at the change in terms of what needs to happen for you to now break even. So as you're adding costs and you're looking at costs, so this analysis simply shows you what would happen if you did that. So that's why that's put in there to show you the big bump in sales you got to occur. Any questions? Any questions now? So if we clear up those and we clear on these, well, you know, you made a different assumption. That's not the, you know, that's not important at this point. The question is, could you come through and do this chart?
I have a question. Like with the hiring accountant,
Mm-hmm.
we just make up a number, or like how does that?
We had 50,000 last time. You may not have heard it.
I know I do remember you saying that, but I didn't know that was a constant that we'd be using.
The purpose of that was to show you that if you pay somebody 50,000, you know, that's really an added fixed cost. So if
Right.
you got added fixed costs, then you got to sell this many. So
Yeah. Okay, that makes sense.
let's,
For my group, we didn't put that. Could I fix that and send it to you again?
you don't have to fix it. I'm not going to take off. It wasn't clear.
Okay.
Not a big deal.
Okay.
We need to focus on learning. And, you know, but the grades will take care of themselves. So when I'm looking at homework, you know, a lot of time I'm looking at, you know, did you do it if you made an, you know, an assumption like it's not like this is an exam or something like that. So you don't have to, you know, just fix it and learn how to, you know, look at what we're talking about.
Okay, thank you.
Okay. So let's talk about what happens. You know, a lot of times a company will say, well, we're going to reduce the price to get people to buy. Okay. So we're looking at, everybody see this example, right? Everybody see this example. So suppose the company drops the selling price to $90. It drops the selling price to $90. And let's assume this 50, let's assume that the 50,000 is an ad campaign. So they drop the price to 50. They drop the price to 50. And they have an ad campaign. We've dropped the price. And let's assume that the quantity sold goes to 5,000. Okay. So they're dropping the price to 90. There's an ad campaign of $50,000. Okay. And they sell 5,000. What is the net income after they do that? What would be the net income? Yeah. They drop the selling price to 90. They sell 5,000 and they have a 50,000 ad campaign. Would you do that? Would you do that, Emerald?
Yeah, would it be 400?
Now, I'm just saying, would you, you know, coming from the break even, would you drop the price to 90, pay 50,000 for an ad campaign, sell 5,000? Would you make money if you did that?
I don't know. Just from the break even, not at the break even after hiring an accountant.
Well, we're just saying that, suppose that's an ad campaign. Same 50,000 is an ad campaign now. Let's see if we can put a number in here. Okay, so if we did that, this number is now 5,000. If we multiply by 90, what's the total sales going to be?
It would be 450.
Wait a minute,
And then
5,000, 5,000 is 450?
mm-hmm,
Okay.
5,000 times 90 is 450.
Okay.
Yeah, then wouldn't you subtract the 50,000 since you're trying to pay the accounting campaign?
Well, yeah. Now, what's our
Oh,
variable cost going to be? So we're at 450. So we got to multiply 55 times 5,000. How much is that?
It's 275,000.
How much?
270.
275,000.
So our contribution margin now is what? So we take those
175.
Yeah, 175.
and our fixed cost of what? Now 190. So what? We lose money with that proposition. So what this shows you is when companies are making these decisions, they've got to sell a whole lot just to get back where they were. So those decisions are not taken lightly, and they really, stay open longer hours, because when they drop that price and do that ad campaign, they got to have massive sales. So this shows you in this situation, 5,000 doesn't do it. You're almost at twice the sales, and you're not where you were break even. Okay, so that's one of the big areas where this is utilized. So, because 5,000, I got to have a warehouse big enough to handle a fire and a place to handle 5,000. And I may have space limitation. And so probably I just can't drop that price that low. So those are things that you consider. Any other question on 4-3? Okay. And all those work the same. All right, let's look at 14-1. That's one you had a question about, right?
Yep.
Okay, so let's
Please,
look.
I had a question.
Okay, so 14-1 gets into how we might lay that out to make sure we got all the cost in. So let's see if we can come up with something to lay these costs out. Put this over here some. And just coming up with a structure to put these in. So we're told the selling price is what?
$200.
Okay. So let's begin to work on the variable cost. How much is the ink?
10.
Okay, the ink is 10. Paper?
$5.
The labor?
10.
Bad debt? Do we see 10% is
20.
uncollected.
20.
That's 20. selling expense.
Also 20.
With 10% of
That'd be
sale.
20.
So therefore, our total variable cost is what? $55.
Be
65.
65. Yeah.
What's our contribution margin?
It's 65.
145.
I thought it was 65.
65.
I had 135 the whole time, so maybe
Yeah,
it
it's
should be
135.
65, then the contribution margin is 135.
Contribution margin 135.
Yeah.
Okay.
Yeah, because it's 65 minus 200.
Okay. What are our fixed costs?
600,000.
I actually got
Minus
$1 million for that.
You $1 million? I just used like the actual expenses that you gave us.
overhead is what? 200,000.
200.
And then the administrative expenses were what?
200,000 paid quarterly.
Okay, so we're not worried about that at this point. How
Why
much
wouldn't we be worried about that?
eventually? And we didn't have any interest that way.
No, but if 200,000 is paid quarterly and that's 4 quarters in a year, would that not make it $800,000 for the year?
Total. So that's just it's the assumption you make. It's 200,000. We paying the 200,000 quarterly, so we divide it by 4 when we paid it. But if you multiply it by 4, that's fine. So
That's what I was like concerned about for this question. I didn't know if we were supposed to.
Like you put that paid quarterly in, so we're paying 200,000 every quarter, or we divide that's not something that you specified.
if you assume it the other way, that's fine. I wouldn't. So that's just an assumption thing. But okay, so it's 400,000. So that's not worded clear. So I agree with that, and you could interpret that way. So that's fine. I wouldn't take off for that. So once we get to this point, there's no problem, correct?
Could you run through that next point though, like just for clarification?
What the
Yeah.
Okay.
Well, yeah.
All right. For break even, our numerator is going to be what? The fixed cost, 400,000. We're going to divide by what? In each case, the unit contribution margin 135. So we can just take this 135 every time we divide by 135. So 135 in the 400 gives us a break-even quantity of approximately how much?
2,963, if around.
Put 2,963.
Mm-hmm.
And on the target loss, what's going to be in here?
Mm-hmm.
400 minus what? But what's the target loss in the problem? 100,000, right?
Yeah, it's 100,000.
If we're going to lose, how much is this? What's this number going to be? $300 divided by
That would
one.
be
How
Oh,
much?
sorry. It'd be 2,222.
Then if we want a profit of $1 million, this is gonna be what? 400,000. So 1,000,004 divided by
135.
5, what's it gonna be?
It'd be 10,370.
Mm-hmm.
And this final one, is this the $2 million one or something?
Um,
I don't
you only
see.
did
Three,
you
okay.
only did tier 3, so you
Okay.
did the net loss break even in that.
Do we see how to do this now?
Yes, thank you.
Everything else. Where'd you get
Yes.
the bad debt expense?
Do that again?
Where'd you get the bad debt expense?
Okay. We go back to the assumption that's 10% uncollectible.
Okay.
That's 10% of the selling price.
Okay.
Any other questions?
No, not really a question, but it was a lot of numbers going on in this chart, and I was just curious to know, was there a real reason that we needed the rest of these numbers, or
Yeah,
no?
because in the chapter they will be there and you'll have all of those numbers. You still got to do the same thing.
Well,
So just
yeah, but like the 60% month, the collections and stuff, that's not what we were focused on, right?
correct. And I said, last time when I went through it, I said, okay, these are the only things you got to focus on. You remember that? All right, who can do this now? Who can't do it now, or who can do it now? Speak
So like
now.
I feel like I could do it, but I also feel like the templates like that there was definitely a big difference between 14-1 and like the other ones that you like 14-3. I feel like 14-3 was a little bit easier. So like the
So can
template that we created for that one was like kind of smaller because the 14-1 it seemed like it was a bunch of numbers because we was doing like 3 different years. But I think once I get that, I should be able, I should be fine though, because I understand like the basic part of it. Like going through it the last time in class helped me, but one step at a time.
Okay, so let's look at assignments and assessment. Assignment. Let's see. Should be switching over to Blackboard. It'll take you a while. CVP quiz. Since y'all so good at this now, I'll give you 10 points for it. So this is an attendance quiz, an extra 10 points. Since y'all give me such a hard time today.
Where is it?
It's on its way.
Is it in course content or is it in assignments?
Assignments. Do you see it?
Yeah, it just came up.
So it's a basic one, similar to what we've had. You got 2 ways to do it, the basic chart way, and then, this other way. span columns. I'll let you use your flexibility. How long should it take you to work it?
$20 minutes.
Wait a minute. So we're doing.
Hold on.
I keep scrolling and finding new stuff. So
Yeah,
That's what I'm saying. It
like,
just
wait a
don't
minute.
stop.
Stuff you can do it one of two ways. You got the information that this is one way to do it, or if you want more lines to do it, that's it. But you're only doing it one time. This is all you got to do. You can use this way to do it, or you can use this way to do it.
I'm sorry. Maybe
You keep
I'm like
saying
slow
this
in not
way and
processing what's
this
going
way,
on
but
right
there's
now.
like joint product costing. You want us to do a journal entry,
No,
process costing.
no.
What you mean? No, this is a document.
It's a lot going on right.
That's
Wait.
what it says. That's what I'm like.
I don't understand what
I
all
said
this
you're
is.
on the wrong one. What's the first thing you got?
The
Wait,
first thing says period 3 exam, like it's the actual CVP, but then you keep scrolling and then there's more stuff.
Yeah.
Yeah.
It's like 5 tests in one now. Wait.
I sent you out the wrong one.
Okay, so we're just doing the first page of this.
Just doing the CVP. So I apologize. I sent you the wrong one. You
Okay.
just CVP. Does that help?
Yes, a
Yeah,
lot.
just had me concerned for a while.
But if y'all run out of stuff to do, Tyler and Kayla, y'all can do the rest of it.
No, I'm good.
Let's not do that.
Okay.
So we can choose if we want to do like the first box or the second box for how we want to solve it.
However you want to do it.
Okay.
So these are due at 12:30. Then at 12:30, you have to send them in, plus send them to Kayla. She's going to go over what the solution is supposed to be. So you all have y'all feedback. And then she's going to tell me how y'all did. So you send it in the Blackboard. So I can be lazy. You send them to Kayla too.
You know, Professor
Professor
Boyd,
Boyd, why are we sending it to Kayla if you're the professor, if you're supposed to correct it?
I get to go
we're
to
missing.
now so that I can get into my TSU web so I can give you grades. And I got another class at 2:30, and the man does not work on Friday.
Okay, that's fine. I just asked a question, but you seem like you were upset by it.
So what I wanted you to do, the key thing is I want you to get the feedback now. So after you do it, I want you to have the feedback. Then that gives me a sense of where you are as we move to class on Tuesday. But you will have the feedback right away. You all would discuss it. Got it? Good. You all have a pleasant weekend.
There's a lot of hostility here.
Deja, you
Wait,
turn your
did he
mic off, sis. Thanks.
It's just the fact that, like, you just said earlier that, you be having stuff going on, and I just asked a question, like, why do I feel like, I don't understand why we have to send another student artwork when he's the professor. That's all that I asked.
I got a test, so after this class.
Don't send it then. Don't send it. If you don't want to send it, don't send it.
I never said that I didn't want to send it. I just asked a question.
It's learning. I'm sort of giving you these points. I just want you to learn how to do it, okay? So to make sure it's right. You got the points. If you hear and you got your screen on, you got the points. Got it? I want you to I want to make sure you learn it.
Mr. Boyd?
Yes.
I have a class after 12:15, and I have a test in that, so I don't know if I can complete this and then do that at the same time.
Send it to me later.
All right.
I just want you to learn. That's the key thing.
So what time is the quiz due exactly?
12:30.
2:30 on 12:30.
Correct.
You put it on Blackboard already?
That should be in there. Any final questions? All right, I'm gone. I'll leave this up so you all can talk and communicate, but I'm gone.
Now he gone.
Guys, if it works for everyone, seems like we're all going through a little distress today. I'll just upload the answers to the GroupMe, and that way, after you submit it, you can look at what I got and compare it. Does that work for everyone?
Thank you,
Sounds good.
Kayla.
Thank you, Kayla.
Yeah, thank you,
God
Caleb.
bless you.
Yeah. Yikes.
Hey, just to
Kayla
make
said,
it clear,
I,
Kayla, just make it clear, everybody send their own thing or just like a team?
Everybody's doing their own individual quiz,
All
and make sure you upload your quiz to Blackboard under
right,
assignments. And
thank you.
I'm just gonna upload the answers, or my answers, which should be right, to the group me, and you can compare and make sure that you're on the right track, so that when we go over this again on Tuesday, we're all on the same page. And before anyone asks, Tuesday, the only thing that's supposed to be due, which he said he might push back to Thursday, is the group project information that he wants from the product that we made. So
Okay, quick question. Do we all have the same quiz?
I have no way of knowing that personally. I would assume so, but yeah, I think we do.
Kayla, how do you want us to send us your quiz, or are we turning it all at one?
She says she gonna send it to us in a group meet and for everybody to upload it individually on Blackboard.
Okay, bet.
Ooh, y'all, sorry about that. Y'all don't like doors. I got my sandwich though. All right. Yeah. So I'm gonna send the answers, and hopefully everybody's been trying to keep up with this project that supposed to be doing. If you have questions about the quiz, just go ahead and ask me. But yeah.
Okay, I think I got the selling price as 50 and then multiplied it to get 200.
Shit. What you mean you got 50?
The $10 for paper, 38
No,
for
that wasn't a
cartridges.
question for you. You have to go back and look at it again.
Oh, okay.
No, my confidence is pretty much shot these days, so he could very well be right, which is why I prefer for him to not lean on me heavily like this because. Wait, so you got the selling prices? What?
1 second. Like for sales, I got the number as 200.
So it was $10 for one ring, right?
Yeah.
And then the ink was 2 cartridges at $19 each, right?
Yeah.
So that's 38. Well, fuck me. You're right. And I kind of fucked that up.
I just turned mine in. If it's he's not gonna be mad if it's turned in at 12:30, right?
He shouldn't be, but
Okay.
Tyler, you're right. The selling price was supposed to be 200, and once again, there's no way I can understand this either. So yeah, I'm sure he's gonna go back and look at this recording later, but I was wrong. And by default, my quiz is wrong. So
is it supposed to be like turned in right now, or you still have time to work on it?
I already turned it in. So I mean, yeah, it's supposed to be turned in right now. My apologies, guys. Yeah, can't really delete a message out of GroupMe, so.
All right. I gotta go figure out how to register. I'll talk to y'all later.
All right. See y'all next week.